Well, happy Monday to you. It's Joe. Let's get into the market roundup. It's the 8th of August. Boy, do we have a different day than we did on Friday. Guys, I'm going to give you my 2 cents. It's just opinion. I've got a couple trades to look at if you want to follow along. You know the drill. Take responsibility for it. All right, let's get into the market analysis. As I'll tell you what, the day started out pretty great. I was thinking that we were going to have a really good push through with Friday's close because Friday we came right off that bottom despite, I should say, or in the face of a very strong jobs number that I would have thought had a negative impact because that just shows that we're still growing. However, I thought we were ready to go. Now, we started the day off with NVIDIA came out, large chip company. They warned, not doing very well on their earnings, and the markets were ignoring it, gapped up, moving higher, and I'm like, oh gosh, here we go. We even had, and this is what I like to see, dun, 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 right? The meme stocks are back. I thought that was really hilarious. Bed Bath & Beyond got a massive short squeeze. Yes, it went around again. It actually tapered over into GameStop and AMC. I'm not sure if it was sympathy or those were also included. But Bed Bath & Beyond closed just shy of 40% up for the day. We'll see if that lasts. We'll see if these institutions learn their lesson the first time and aren't going to underestimate how powerful the social aspect of trading is. But nothing held on. Long story short, guys, they fell back. Let's take a look at our finished results here. The Dow, the S&P, and the NASDAQ pretty much flat. Both the S&P and the NASDAQ were negative. I think if the Dow had an extra 30 minutes, it probably would have gone there as well. Although I did see that the Russells finished pretty strong. Now, guys, if you want to take a look at that chart, I've got a chart that mimics it. The small caps, not quite the mid, but I've got a 3 times small cap chart that actually triggered above resistance levels. We'll take a look at it moving forward. For you guys who are bullish, they're in Triggerland. Oil and gold both strong. Oil's up quite a bit, but understand it's still below $91 a barrel, and it got smashed, so it was due for a pretty good bounce. I'm not going to look too far into it. Now, advanced decline line wise, folks, that's a tongue twister. 66% up, 30% down, and 4% didn't go anywhere. 73% of all stocks are above their 50-day moving average, which I'd expect that number to be a little bit higher because we've been trading higher for quite a bit. Let's jump into the SPY here, and you can see we have this nice base. Now, what I was focused on at the first point was the move off of the lows on Friday, and this morning, take a look, you can see the high there. It looked like we were on our way. I really thought that news, the NVIDIA news being ignored, was it. I'm like, oh, geez, and then I saw some of that meme stuff playing out. I'm like, wow, everybody's back. They're ready to buy. We just didn't gain any traction. Now, that can easily change tomorrow. We could go right back up. I don't know what's going to happen. It's just, it didn't give me any sort of momentum coming out of Friday that I would like to see as a bull. Yes, folks, I'm leaning a little bit more towards the bull side just because we're sustaining these levels. And I think the markets are kind of sick of bad news and digesting, yeah, inflation, this, we understand. So that's where I'm lying. That's an opinion. I don't trade it. I trade the market. So we'll see. We're stuck in that range, 410 to 420. I'm going to call it a push-pull, right? You guys have heard me say this before. The push up one day, the next day it's a pull, and it ends up going nowhere. They're very frustrating, but it does help when it comes to outperformance and underperformance, right? Or consolidation sideways trades. Into the Qs here, you can see that it is above that level at the 310, but it does have the 330 resistance. It's pretty much in the exact same boat, just one tier higher. That's kind of where I'm going to leave it. Now, considering what NVIDIA did, this held in really well. Really well. I was surprised. I was surprised that it didn't pull back a little bit more. So I'm bullish on this just as much as I am the others, but more of a hesitant or consolidation. You can see back here in mid-March, that's the level I want to see it stay above, 320 respectively. Moving forward. All right, so heat map doesn't really tell us anything. This was a lot more green earlier today, and it just kind of faded off. Seems like everybody was ready to buy from Friday. They put their money in, and nobody jumped back in. I think there's some hesitation on some of the, let's call it follow-through money, right? And I'm not sure if they fully digested that employment number, which shows a lot of expansion. We'll see where the CPI and the PPI go this week. Now, my market outlook has to be flat, and it's easy to do because I got to see Friday and Monday. So I am at a 0. I'm going to keep my monthly at a +1. I was debating a +2 there, but what I want to do is curb my aggressiveness in a bullish direction and take more advantage of these range-bound or consolidating stocks. Now, there's a few out there, folks, that I've been showing you week to week. Google's one of them. I got them up again. It's a tough one to play because it's a large range. But man, if you've got the cojones, it's staying well within that range. Let's jump into what I found. These are just from my older watch list over the last couple of weeks. You guys have seen some of these up in the bull side and some in the bear side. They just continue to do what they've been doing. I liked TNA, and that's the one where we'll take a look at first. That's the 3-time bullish small cap. Rivian looked really good, SRG, and then T-Mobile, as far as communications, is outperforming, which is hilarious because you cast your eyes all the way down to the bearish trades, and I don't know what's going on with AT&T, but it just looks like crap. So let's start with TNA, and that's that small cap. Bullish 3-time shares, and look at that pop up today. It looked good on Friday. We were discussing this, I believe, on Wednesday's class as a push up to that resistance at about 47.5, and you could see it's right at it with a gap. So you're early enough to where you could build a trade on this, maybe something up to the 50-day moving, or not the 50-day moving average, but $50 level, or up to the $55 level, depending on how aggressive you want to get on the bull side. Now, if you truly believe that this bump from Friday up into Monday is just going to fizzle out, you're kind of a bear sideways, this is one to play on the sideways. It's outperforming, and it has been for a while. It's come off the bottom pretty strong because it's June. So, hey, one to take a look at for both bulls and bears, sideways or up. Rivian has been very steadily higher. And what I liked about it last week was it did push above that 36 level, and it looks like it's pushing again. I think 40 is a true resistance for this. I truly think it's going to consolidate it right around that 40, between the 40 and 35. You can see the support that it had back in March. So another range bound, slightly bullish, pretty good stock to trade. And then T-Mobile, there you go. Just broke out. I do believe it's a little extended, something I don't want to buy to the upside today, but look at the nice break that it had last week. Was that 2 weeks ago? Above 140, and it's just stayed up there. Volume has dropped, and it's just stayed up there. It's just floating higher up the 145 area. There's something about this, and when I show you AT&T, it's kind of like, geez, is everybody bailing out of that and going to T-Mobile? I mean, one of them has to work out. I guess I haven't checked Verizon. Anyways, I don't have to look that deep into it, but I do like the chart. So another one to look to on the bull side, or at least sideways if you think a correction is due. Now, here is the sideways that I like, and this is Google. We've been talking about this since July. Resistance set the end of June here, just below the 120. Bounced off of the 107.5, back up to 120. Came back down, hit 115. You guys here, yeah, you can see it. And now we're back up to that 20. The difficult part about being up at the top of a range or the bottom of a range is you have to, if you're range bound, sell it here. And it's almost counter trend. We're above the averages, we're moving higher, but we haven't broken any price actions. We haven't really confirmed or broken any sort of pivot. So if you're a Bollinger Band person, this becomes a little bit easier because you truly believe in retracement. If you are a price momentum person by trend, this can be quite difficult. But until this settles comfortably above 120, it's still within this respective range. Even if you don't think it's going to go back down to the 105 mark, playing it sideways or down from here has a higher probability as far as statistically, right? We'll see. Let's get to PM, Philip Morris. This has got a wider range. I actually like this as a bear rally, and I was looking to short this up until about 3 weeks ago. I had that. There was a huge bounce coming off of July's low, and I'm like, okay, that's oversold. But the consolidation it had at 96 in the last, I should say 10, 15, 12 days ago, whenever that is. It moved up back to the 50-day, and it got above that 98 level that it set in June, and that it actually touched in early May as well. That's got me a little more, oh, geez, I'm not as bearish as I want to be, because I'd love to just dump this thing if it rolled over. So now I've got this consolidation area like, well, maybe this thing will move more sideways. Now, it's got a huge range, anywhere from 104 all the way down to 90 and anything in between. Just pick strike prices if you're a condor guy, butterfly guy, and just kind of play it there. But it really hasn't gone too far off. If you take a look at the last 2 weeks, it's got a $2 range, 96 to 98. A little higher, a little lower, hasn't done much. Let's go to the bear side, PDD. This has been on the bull watch up until about July, right? Nice move to the upside. A lot of these Chinese retail companies, Chinese automakers have been doing really well, and now they're coming back down. We got a nice crossover. I love that crossover there in August. A good pivot point 3 days ago at resistance or a falling 20-day moving average, and it's moving lower. I'm a little early, personally. I'd like to see this thing break that $45 floor first, but this is something I'd be comfortable throwing a diagonal put spread on for the time being, or some sort of credit spread below 50. So I like this in the next week or so. That's about as aggressive I get, but once this broke 45, with the markets rolling over, I think I'd be pretty comfortable getting more aggressive. Now AT&T, I kept looking at this one after it gapped down here mid-July, and I just can't make heads or tails of it, but boy, nobody's interested. Today's candle was just dumping it. It's almost like people are bored of it. I mean, the volume increased a little bit from Friday, but it's at that $18 consolidation level that you saw the end of March into April. So it could kind of putter around between the 18, 17 and a half level. So I wouldn't get too aggressive with it, but that's percentage-wise a pretty good move. But something sideways to down is just out of favor. And then BABA, another one that just had that nice touch on Wednesday. All right, that's Thursday of last week. Gapped up, hit the 20-day, fell apart, dropped, gapped down, and is floating back down to that 90 support level. When and if this breaks 90, another awesome opportunity to the bear side. So that's kind of what I like, guys. That's all I got. It is only Monday, but a lot of these trends, if you take a look, I've been doing this for a while. The markets, we can't really make heads or tails of it, and don't really worry about it. I mean, Friday said, hey, I think we're going to move higher. Today, we failed highs. We were going higher, and everything just fell apart. It's an absolute opposite, pretty much inverse to Friday's move was today. But that tells us there is a lot of hesitation and consolidation and respect for the levels that these markets are at. But what I'm not seeing is participation in all stocks. Not all stocks are consolidating, are they? The ones that are getting beat are slowly getting hurt worse. The ones that are outperforming continue to move higher. So keep that. Focus more on the consolidation levels of the markets. And as they stay between these ranges, let's focus on under and outperformance. Might be pretty cool to do +1, -1 over the next couple of weeks, especially if we can get through the rest of the summer, which, a few more weeks into, I should say, early fall as we get out of earnings season. Now, guys, we got the hot jobs report. It was ignored by the markets. That's an inflationary gauge that the Fed's going to have to curb. The markets liked it, at least towards the end of the day. We do have a CPI and a PPI due out this week. Darren and Rob talked a lot about this on Sunday, and I think it's great because the focus will probably be reacted to more with the CPI because it seems to be a little bit more of a leader recently or more reactionary. That being said, guys, where these markets are at, I couldn't guess. So I'm not gonna. I'm just gonna watch what happens after the reaction. So we are winding down out of earnings. We got AIG, OKE Energy, Take-Two Interactive, I believe, was down almost 7%. I didn't see the numbers. That could change. You guys go ahead and make sure you do your own research. All right, that's all I got for a Monday. Thank you so much for joining me, guys, and we will talk to you next time. Bye, everyone.